Hello, and welcome to August 31st, the last day of August. For KR at 288, a little fallback of 6%. Stochastics also suffered a fallback, just minus 6.8, and the SPY flattened out at 22.5, but yesterday was 22.6. Okay, that's out of the way. Let's go on. There's KR, and you can see we got into this little bit of a doji zone here. Doji here, then a little spinning shop doji, then doji there. And so price seems to be decided to, maybe it could be still in accumulation. It could be, yeah, I would assume it's going to be accumulation. And at the same time, we are at 288% ahead. And this is DTE trading. And DTE trading is that we are going to the end of expiration, or I was contemplating that taking that money off the table at the 10th ratio at last bar low, which would have taken it out right up here, but it would not fulfill my desire to get my my desire for DTE. You know, I want to prove or disprove it to myself, and that's what holding on to. It does hurt the account. I have to totally 100% agree, because had we not done DTE and gone in also DT and then two benchmarks of YELP and AT&T with the original rules of DTE not having any stops, this account would not be suffering as much. Consider that these two have been off the boards, and they would have been stopped out at the initial stops, and then only Telray will be the only one holding us back, and that Telray is already counterbalanced by the 288 from KR, and then that makes Raytheon at 18% will be countered by the PG of 89 from PG 89, and then XLP, who joined us, is at a -8, would have been counterbalanced by the 36, giving us a DBA at -8. So, but on with March. October is coming. Tomorrow is September 1st, and that puts us up approximately 45 days. Yeah, puts us out approximately 45 to 50 days away from getting rid of AT&T, and then AT&T will be off the books. And then my anticipation is that the continuing on these results and cutting losers ASAP as soon as possible, then this account should start seeing some recovery by the time it gets to around January 1st. Maybe not as good as the 22% from SPY, which is the master benchmark of any trading. And I am portfolio managers can go on and talk about how much they're doing 12% per annum or 15%. You know, if you can't beat the SPY, then why bother getting into pension funds getting into anything other than the SPY? Collect 22% and minus expenses of approximately 6%. And then maybe 1% in overhead costs between actuaries, legal, and financial advisors. Yeah, you still keep a financial advisor. Oh yeah, keep the financial advisor. And the bottom line is that the fund then has a tremendous chance to grow. So let's do an experiment here. Here is the 22% that was calculated today for the SPY, 22.5. So we'll go ahead and clear that out. But consider that if you got 22% and the fund has a 6% expense and maybe another additional 1% for holdings for the ETF, that's 15% divided by 72. That means 72 divided by 15. Remember, there's a 72 rule. 15, that comes back, the fund doubles in every 5 years. Every 5 years, the fund doubles as long as we're maintaining a net 15% per year. Has it happened? Not on a consistent basis, but there are some years that the SPY just zooms and makes up for that. The average SPY right now for the last 10 years is almost 14%. So, all right, enough of that. Let's move on with the numbers. That's KR, and that's pretty much it for KR. Going on to PG. And here at PG, we have there we already have PG, and PG is doing a bit of a struggle. It's coming up and hitting resistance on the 10 EMA. Our stop is still here at the first ratio. If we have to have done the first stop or done the second stop here at the third ratio, we would have stopped out here. But again, this is DTE trading. If we were a 3-to-1 system, which is going to be the forward testing for September, we would have been out back here. We would have taken our profit at 3-to-1, which is a set and forget kind of trading, and that's what we'll be looking in for September's forward trading once we finish this week with Stochastic's trend. Okay, going on to XLC. XLC is at 36%. XLC is the ETF for media, and it's moving a nice look, a nice parallel march between the two. Very good. It was 117. We are already, we are in just barely in profit, considering it. We're in profit, and that would have been an exit above 117 would take us to the winner's circle. But this again, the DTE, we're going to see if what this value will be, and this is good till December. That means it's way over here. Yep, way over here is the December stop for XLE. Okay, so let's go ahead and reset, and excuse me. Okay, going on now. That completes that. Telray has some good news, so we'll look at that on its own separate video. YELP continues carrying forward. See if we can get out of that basement. Anything less than 30%, anything minus 30% or greater is considered the basement in my book. WBA got stopped out. Let's go ahead and knock out the numbers on WBA. WBA got stopped out, and it was a put. This was a put, and it didn't go. The puts, the calls won. We got stopped out here for a loss of 30% right there. First ratio. That's really within ballpark. So 30% 12 days loss. 157, $2 in fee, 159 with a carry of 1905 and a new O 2064. So but the bottom line is, I have said before, the first ratio on average is a minus 30% if the first ratio is lost. And this being a put, we got stopped out right there. Okay, that does conclude that. Our coffers are back up again at 631. So that means that it is going to be scanner time to see what we have. And we'll wrap it up real quick, looking for opportunity for the alphas. So here, Stochastic uptrend is what we want, but we're going to be switch this to the alpha account. There's the alpha list. This is how you also lesson. You build a scanner, and then you say, "Oh, I want to make some parameter change. I want to increase the volume or increase the volume or decrease the volume. I want to scan for stock between $1 and 10, or $1 or 1 penny to $1 if you're looking for penny stocks." So here we are going to set up for alphas in the closing seconds, and let's see what we got, and away it goes. So alpha, looking for one more opportunity to get in. XLC was, I think, the last one we joined in. Okay, Activision is here, so we'll go ahead and mark off our Activision, and now we'll go ahead and load up our scanner for the downside. And remember, this is trend. This is personal trend. Now all these are defaulted to alpha, so we'll be able to rush it pretty fast. And the answer is DBA, which is already in place. So that's a pass. So that takes us now to price closing below the 10 EMA. Price closing below the 10 TMA with the STO in tandem. And the answer is SLB. SLB, we have to look at SLB as a put on the EMA. Okay. And ATV was trend up. Okay. And now we'll go ahead and load up the upside. And if we get more choices here, we're pretty much done, because I can pretty much assure you that ATV, which we traded before, is going to have some good options, and SLB, I know from past history, has very good options. ATV came up again. So that is really the conclusion, pretty much. Stochastic down. Remember, this is just the stochastics all by itself. No restriction in what direction we're going in. And XLK, XERK. So we have XLK and XRT for puts on the STO's foundation. And now we'll go ahead and load up and come here, and now we'll do the stochastics to the upside. Again, this is like the bare bones of stochastic strategy, just the plain bare bones. And there is a theory being developed, but nothing there. Well, that is it for today, and we'll catch you tomorrow and see who gets qualified, who gets picked up for tomorrow's trading to take up that open slot. And with that, I thank you very much for stopping by and checking it out.